Well, just a few years ago, Nigeria's crypto ecosystem was defined by uncertainty. From 2021 through 2023, the industry struggled with unclear rules, policy pushback, and that's about how businesses could legally operate. That picture began to shift with the passage of the Investment and Securities Act, ISA 2025, which for the first time created a framework for regulating digital assets. Well, today we'll be reflecting on how Nigeria has moved from an informal crypto market to a regulated ecosystem, what licensing is meant for businesses and investors, and where the next phase of innovation and growth might come from. Well, joining us to discuss this now, we have Olaoluwa Samuel B. He's a co-founder, Busha. Join me to discuss all of this. Great to have you on the show.
Thanks for having me again, Ladi.
Yeah, so quite the move, We've seen, with a snapshot, of Nigeria's digital industry. We see Nigeria ranks second globally in P2P Bitcoin trading volume. That was in 2024. Over 40 trillion worth of crypto transactions reportedly passed through Nigerian platforms in the last year. And now we know Bitcoin is a security in Nigeria. And I'm trying to imagine or, cast my mind back to maybe 2016, 2017, 2018, where it was seen as a wild, wild west, at this point. Anybody could just come up and, start up a crypto platform, and you don't even know who's behind, that platform. But things have changed. Talk to me about what you've seen so far. You've been licensed. How's it been? After a year.
Indeed, yeah. It's been a wild ride, It's coming from a past where the industry has been a pariah to the system, as you described, and the regulators at the time, or historically, had always had a head-in-the-sand approach towards the industry. As you described, it's a very big space, lots of youth participation, so it's one that needed some sort of action. The historical action had been one of prohibition, one of heavy clamping down on the stakeholders in the space. But now, with the new administration, there was a complete U-turn around the posture towards crypto. And it's very hard to comprehend the radical change that has happened over the past year. But there's a lot of recency bias around how long it's been. But it's only been a year, and we've even preempted lots of the other major markets across the world around how we took a proactive approach towards sort of regulatory innovation that we've seen so far. So it's been a year, and that year has been an interesting year for us, to say the least, as Busha. We've been working with the regulator, the primary regulator in this case being the SEC, and a lot of the effort has been around just regaining the trust that has been eroded over several years. It's very hard to get back on the table with the government. There's a lot of skepticism on both sides around the direction going forward. And
because it's funny,
yeah.
To some minds, at this point, when they hear crypto, they're afraid at first. Or it used to be that way, a couple of years ago. But I'm sure there are still people that are still quite like, I don't understand it,
There is a lot.
There's still many.
Indeed, and it's importantly, there's a lot even within the system on the public sector side that there's a lot of action that needed to be taken to wean them off that perception. And so a lot of the work that the regulator has done and focused on for the first year has been around that education aspect of things, both building the capacity internally within the SEC. So now they have an entire department focused on the sector. We have very real-time collaboration, reporting, and just learning from each other. And the philosophy of the space has always been one of competing with the system, rebellious, but now we're trying to find a balancing act around how to satisfy them from their consumer protection and investor protection perspective, and also satisfy us from our business growth, user adoption, economic freedom perspective. And that's a very delicate balancing act. So this year I've been really focused on that. You see the SEC participating in industry events more actively.
What's it like working with the Securities and Exchange Commission here?
It is a very tough, I would say a very sacrificial effort on both sides, really. From us, it's a very heavy cost to compliance. A lot of people really want to get in the compliance fold, but it's been one you can't really move fast and break things anymore as a startup or as a fintech business. You have to build everything based on compliance rigor, consumer protection first perspective. And that has meant that we really had to bolster our compliance infrastructure, run everything by them, report everything proactively.
I'm talking about reporting everything, proactively. Yeah. I'm trying to imagine how, a cryptocurrency or digital asset exchange, works. You might get a listing, a crypto platform would, approach you and say,
University of Cambridge arm to launch into the market an executive certificate program for the space, where it's going to teach people in the industry, in the public sector, but also in the private sector about the basics of the industry, how it's looking like globally, and how it's going to evolve in the African context. But all of those things are happening right now, and very actively as well.
Wow, quite interesting, with Cambridge at this point, because we need all the education.
Absolutely.
At this time, so everybody can actually understand
exactly what's going on. Yeah.
How, because cryptocurrency can be quite daunting. Just trying to transfer funds. You get a string of letters, numbers, mixtures of different things that form an address that's unique to you. So the education, it seems like it's almost like you're learning coding.
Yeah, our approach has really been to simplify all of those blockchain-heavy elements of the space, and just obscure a lot of those complexities, and just offer a very simple interface for users. And that is also what the regulators are concerned about, ensuring that people who are interacting with the space are not confused. And this is usually the angle that a lot of the dark
because
elements
confusion could lead to loss.
Absolutely.
You could end up sending a lot of money to a wrong address.
Yes. So in fact, part of the design of the regulations is around our systems. How do we communicate these things that we do? We design them to minimize the potential for those types of losses. So all of those things are things that we've really evolved over the past year, and trying to ensure that our system is as simple as you'd find in the legacy systems of the banking sector and all the other fintechs that you see in the market. So
Right.
It's early days, but we think that the future is definitely bright for the industry.
And talking about early days, definitely some industries come up and they attract a lot of investment. We've seen foreign direct investment in Nigeria. That's not living up to expectations, even though FPI doing well, but that's hot money, according to experts. So do you think the cryptocurrency industry in Nigeria it has that potential to attract FDI?
Yeah, it's returning, actually. There was a trajectory of growth before we had the whole banking ban that really spooked a lot of external investors. But now we're starting to see a return of those types of long-term FDI type investors, because of the legitimacy that this licensing regime has brought back into the space. They're still sort of a bit cautious around interacting with Nigeria. There's still some sort of coherence that needs to happen within the system as well. Some agencies are still here and there, while others are stronger on the industry than the others. But over time, we're starting to see them gain more confidence about the market and enter the space again. You can see from the numbers you quoted as well, lots of retail participation is still very active. What we're seeing now is a lot of institutional participation, where the large corporates and SMEs that have been in the shadows before and didn't have confidence around interacting with the space are now beginning to consider digital assets as part of their entire portfolio strategy, interacting with licensed players to be able to hold a certain percentage of their assets in digital assets as well, and figuring out what their strategy is around offering this to their own customers as well. So now we are beginning to partner with other regulated players around designing products that might appeal to institutional segments and global segments as well. So this are the positives of the regulations.
And talking about monies coming into investment coming into Nigeria, we're also hoping those investments stay.
Yep.
Because most of the time when you hear a fintech raises this and that amount of cash, at some point there will be an exit, and that money would leave Nigeria out. And using foreign cryptocurrency exchanges at this point, that's like importing, because that money is going out at this point. Even though the trader is making money, those fees are going outside Nigeria and creating jobs outside the country. Talk to me about creating investment here in Nigeria for this crypto industry, especially for cryptocurrency exchanges, and that money staying in Nigeria.
Yeah, a big risk vector, even beyond the capital exports window, there is the fact that the foreign exchanges pretty much can do anything they like outside of the regulations. So a lot of regulatory efforts and enforcement that's going to happen is around ensuring some localized content around bootstrapping local activity, ensuring that the offices and the principals are local, and that can ensure that some tax revenue also stays in the country as well. And they can adhere to pretty much the safety and prudential rules that the regulators are imposing. So the foreign players are still in the market. they're still sort of, doing whatever they feel like doing. But I think over time that is going to start to change as well, where the regulators are going to begin to clamp down on value moving out of the country and ensuring that value stays within. When the capital comes in, we're going to hire more people locally, invest in local talent when it comes to blockchain-specific talent. And the way the banking sector evolved from 2 decades ago, where we now have a very robust banking system, is the way this would also evolve going forward. But also, all of those things require lots of localization of capital, of talent, of regulations, and all of those things as well. But I think that's happening. But yeah, we're going to see a lot of enforcement and a lot of regulatory rules reaching specifically to ensure localization coming on stream as well. We're seeing some of that happening already.
Do you think the foreign cryptocurrency exchanges and the local ones should have the same rules or somewhat differentiated?
Similar to has everything in the banking sector or even the asset management sector, there needs to be some sort of unification of rules. The foreign guys need to really adhere to the rules, same rules that the local players are adhering to as well. And the local players are adhering to very rigorous rules, many of which most of the foreign players would not be happy to fall under. So as long as the rules are rigorous enough for the local players, there's a level playing field for any foreign player to also walk in, as long as they're happy to adhere to those same rules as well. So there will be no preferential treatment for both parties. I don't think there's any need for any regulatory preferential treatment here. As long as they offer better service, you have more rigor and you're able to build the trust from the user base. I think you compete effectively against the foreign players as well, and that's what we're trying to do.
But do you think the foreign exchanges are keen on getting a license in Nigeria?
A few of them are. Many of the models that some of them have just do not satisfy the requirements. A lot of P2P trading that's happening that's really outside of the acceptance framework of the local regulators. So many of them just honing in on that P2P segment. There's really limited rules around things like derivatives so far, or things like staking, and many of these things that these foreign guys are strong at. So most of them would not be keen to fall into the local rules yet. But those rules themselves will evolve to be able to accommodate some of these players, as long as they do not compromise the integrity of the system as a whole, because we always have to balance what they care about and what the industry appetite is gearing towards.
Right, and looking at that P2P market, it's one that you have to keep an eye on most of the time. And I've noticed that when transactions go on in that space, there's always that instruction: don't write anything about crypto when you're transferring money. So there's still that fear of Nigerian banks.
There is. The P2P market in general, just as you find in the FX space, it's a black market. It's one where trading is happening from the person to person, and that's what P2P means. The authorities generally do not favor the P2P space because it's outside of their purview, and they cannot really institute protections for the consumers or for the investors. Usually they prefer the counterparty to be an institution that is regulated, and therefore they can offer the certain protections and write rules around how you interact and pretty much coordinate the market. The P2P market is one that cannot be coordinated because it's inherently decentralized and it's person to person. So you don't really know the counterparty on the other side. You don't know the quality of the asset they're transferring to you. You don't know the source of the funds they're moving to you as well. So you might find yourself just receiving money that comes from a sanctioned jurisdiction or from an illicit actor, and you don't know that as a recipient. You hit your bank account, your account gets blocked. That's why those instructions are there. But when you're working with a regulated player, you're confident that they have bank accounts that are whitelisted by the authorities. The funds you're receiving is clean, and you don't have to worry about all of those counterparty risks that are inherent in the P2P market. So the regulators focus on really regulating the centralized players that they can coordinate and write rules for, while trying to clamp down on the black market that is the peer-to-peer space,
right,
which is what is leading with the foreign.
And before the black market space, that's the P2P space, you could transact, openly. You could get cryptocurrency exchanges to directly credit, a customer's account. But that changed,
Yes.
After all the bans and all of that. So why aren't we at that phase again?
So now today, at Busha, we can credit you directly to your bank account because we also now, able to interact formally with the banking system. But it takes a while for the trust of the users to return to decentralized platforms that can credit you directly. And many of them do not even know that they are now licensed players that you can work with safely. Many of them still operate with these foreign platforms and these P2P venues because they don't even know that that these rules have been lifted, or there's a place where they can operate cleanly without fears. So a lot of this education still needs to happen, that we need to, even as push out there and really try to inform the users of the changes in the system. But it's going to happen over time where, as we advertise better, as we do more events, as we do more education, people trust the system better, and they understand that they can transact with a player that is,
And we're definitely watching out, to hear from, the bank regulator.
Yes.
At this point on what to expect. But we'll just a quick one for our DSTV viewers. We're going to join the live coverage now. African Chiefs of Defense Staff Summit 2025. That's starting now on DSTV, but we're live on other platforms. You can still continue following the money right here. But it's been great having this conversation with you. But before I let you go, what are you seeing? It's been about 1 year, of regulation so far for the crypto industry. What are you seeing years later?
I think you're going to see a more mature industry. You're going to see a system that is more accepting of the stakeholders in the space, and a lot of growth over the short term and also in the medium term as well, where more ordinary participants are going to enter the space, more corporates are going to enter the space, and that's going to come from just a broader trust base that we're currently cultivating with the regulators. But I'm very excited about the future of the company, about the future of the country, as we're really leading across many vectors. So hopefully, the more you see me, the fatter I become, and hopefully the whole space is
right.
exciting.
And definitely, I know the traders will also want to know what's ahead, for them. Do they see more gains? Are the gains gone in the crypto market?
I think we'll see a lot more stability and less volatility as the space broadens. So I think that's more important than just if you see more gains.
10x, 100x, is that over?
It's still there. If you can, of course you have to do your own research, ensure that you're buying the right things, but also working with the regulated platforms to ensure that your losses are somewhat mitigated and protected against. Because we can't list things that are just random and high risk or extremely risky. So by working with us, you have to have some basic level of protections and downside protections. But really, I think that the industry is still young as a whole, and there's still a lot of upside to it. So yeah, it's still a good portfolio piece for you, definitely.
And I know Kanye West released a meme coin.
I saw that
recently. Didn't do too well.
Didn't do well. Yeah.
How are you seeing all those meme coins?
They have their own category of things. It's not really the most exciting thing for the regulators or for regulated players, but it's a heavily demanded sub niche of the space. So yeah, if you can buy into the meme story, and a lot of these guys buy it for other reasons beyond even the gains. But yeah, it's a purely speculative market. It's a fun market as well. So yeah,
can be fun.
Hopefully you're having fun as
when you're making money,
you're also losing money.
But not much fun.
Yeah.
When you're holding a bag.
Yeah, it's a very hard industry to really gauge on fundamentals, but yeah, that space is also evolving, and we'll see where memes go going forward. Wow,
memes, quite incredible. Things just keep happening, in this space. Well, thank you so much. Thank you for helping us, unpack this. I'm sure at some point maybe we'll have an exchange that's just run by artificial intelligence.
It's very possible, yeah.
Just on its own, self-aware. We'll keep watching. Thank you so much. Laoluwa Samuel B is a co-founder of Busha. Thank you for coming on today.